Hey everybody, this is DJ Paul, and in this video is what I want to do is talk about important tax information for DJs, specifically mobile DJs who are the sole proprietor or owner of their own DJ business or who just DJ for extra money. And the idea behind this video is that you record all your business expenses and all your income in a way that when you report it at the end of the year, you don't get audited by the IRS because you have a bunch of extra money in your account, and just how to file for taxes so that you're paying your fair share of taxes without having to pay Uncle Sam too much, because as DJs, we all know that DJ equipment's really expensive. So if we were just reporting all of our income without any of the deductions that are business expenses, we would be paying a lot more than we should be paying because we all know how expensive some DJ equipment is. I'd also like to take a moment to thank Gragg. He's an accountant here in Bakersfield, California, for sitting down with me and explaining all this to me. He's the accountant that I file with, and I really recommend, if you're looking for a good accountant, definitely reach out to him. He can file taxes for you. Basically, this page is the only amount of information I need to give him, and he files it for me, and usually I get a huge tax return check, which I'm very thankful to him for. And the other disclaimer I have, this is generally for people who run their own business and are pretty much your own employee. So if you're a multi-op business that has employees that you work, whether they have W-2s or anything like that, maybe I'll make a separate video for that. But at that point, if I were you, I'd just hire an accountant to help you go over that, because there can be a lot more particularities depending on how many people you employ and all this stuff. So this is really just the people that do their own events and they make their own money and they have their own expenses. So the general gist of what we're going to be doing here is we're going to take the revenue, which is the amount of money we receive coming in. Then we take the costs associated with our DJ business. So this is any expenses that we made throughout the year. And we basically take the costs and we subtract them from our revenue, and that's the taxable income that we report to the IRS. So the taxable income is basically the money that you have coming in minus all the business expenses that are related to your business, your DJ business. And the other thing that's really important to report is miles deduction. So if you own your own car, any of those miles that you're driving that are associated with your business, let's say you're driving to an event or you're doing things like venue visits and things like that, that's also a deduction, and I'll show you how to do that. So in this spreadsheet, and I will link the spreadsheet in the description so you can download it. It's a modified example because I wanted to protect my clients, but basically I have three different sheets. I have this page, which is the overview. Then I have this page, which is the income page, which I'll talk about in a second. I have this page, which is basically expenses that I've paid. And once again, this is very reduced and I don't have most of the expenses. And then I also have this page for inventory, which is just my way of keeping track of all of my items that I've purchased and which location they're in, whether they're in my van, in a storage unit, in my apartment, things like that. But I'm not going to go too much into this, but I just kind of have it there so you can see how I keep track of things. So in the income page, there are a couple things that I like to record. I like to record the date that each event was. So each row in this spreadsheet is going to be an event. I have the name of the event, the venue that it was at, the price that I quoted them on, just so I know how much I'm charging, and then the actual amount. Now, this is the actual amount that I received in my bank account. So in some of these, for an example, let's say I was quoted for this wedding, I gave them $1,200, but because they paid through an online portal that via credit card, I have to eat that credit card fee, so my actual amount that I'm taking in is going to be a little bit less than the quoted price. The other thing I like to do is I like to actually self-report tips. Now, theoretically, you're supposed to do it. Now, will the IRS come after you if you're not reporting tips? No, not necessarily, especially if it's in cash, but I like to do everything 100% by the book. So that's why with some of these events, which granted I made all these up, but maybe the quoted price was this and then I was given a cash tip or something like that, I am actually reporting that. And that's up to you if you decide you want to actually report your tips or not. But theoretically, you are legally supposed to do it, even though most people don't. So the other important category here is the miles, and this is the amount of miles I drove both to get from my apartment to the venue and back. So those are kind of why in each row I have the amount that I received and then the number of miles. And then I just mentioned the method just for my own sake, how I got it, whether it was paid. This W-2 thing, don't worry about this. This is if you get paid as an independent contractor, which some multi-ops or some people will do, but that gets a little bit more complicated. So that's just more bookkeeping stuff. And then, of course, remaining balance if they owe any extra money, just so I know that as well. Then in this sheet here in the spreadsheet, I have what I consider to be my past expenses. So I mentioned where I bought it, what the business was, what it was, and then the actual name of the event, which can be different because sometimes it's like, if I'm looking back at this, I'm like, what's this model number actually mean? Oh, this is a wireless handheld mic, just for my own sake. Then I basically put the unit price, the total amount, which is of course the quantity times the unit price, and then the amount to actually count, which this is going to be different because if you're paying sales tax and stuff, that's going to be the amount that you have there. Now, it's really important to keep track of a lot of this information because if you do end up getting audited by the IRS, they may want to see receipts for all of this. So if you have all of your purchases dated and named by the vendor, you can usually go back and find the receipts, especially if they're electronic. I like to do everything electronically, just so that way you keep them. And I would recommend keeping receipts for all your items for at least a year after tax day in case you ever do get audited. I've never been audited, but it can just be a real big pain if you do. So they want to see proof of those receipts. So keep that in mind as well. So the way I'm going to do this for the overview is I'm going to first calculate my revenue for 2020. So I've made this table so that I can sort it by the date, which I have going here. So I'm just sorting these by the date descending. And if I'm doing this for the year 2020, I only want to add the income or the revenue I've gotten from 2020. So what I'm going to do here is I'm going to just create a new category and I'm going to just say this equals the sum. And I'm just going to select all of the 2020 events. Now, granted, I have a Python script and some other scripts that will crawl through all of this for me, but you don't have to do it that way because it can be, I don't know. The script works for me, but if you change the formatting or anything, it won't work. So that's why I'm just going to do it this way. Equals that. And so this is just saying the total amount of revenue I have for this year in this example is $23,608. So I'm going to just go ahead and 608. So do it that way. Okay, cool. So now I got my revenue for 2020. Now's what I'm going to do. I'm going to go and calculate the miles for all these events. So take all these miles for, of course, 2020, which are all these events. And usually it'll actually sum it up for you down here at the bottom, which is why I'm doing it this way. So this is 811. So I'm going to put in over here on the side, 811. And I'll come back to this in a minute. Now I'm going to go to my past expenses and I need to add together all the expenses that I paid for in 2020. So notice I'm ignoring 2021 and 2019 because those aren't the years I'm filing for. And this is the beginning of 2020 and this is the end. I add all that and the number is 10,407.20. So I'm going to go ahead and say 10,407.20. And let me put a $sign here. There's that. I believe I got that right. 10,407.20. Perfect. So, and let me just make this the same size. This is 22. Just kind of be consistent there. Great. And last but not least, our miles deduction is going to be the miles that we drove for our business in 2020 times the IRS mileage rate. Now, this is the idea. If you own your own car, this mileage rate is the amount you can deduct, the amount of money you can deduct per mile. And this is kind of calculated to account for the price of gas, the price of wear and tear on your car, the cost it would take to buy a new car. It's actually a pretty generous deduction, and you want to make sure you're actually doing it because it can be a lot of money, especially if you're driving a lot of miles. In fact, my deduction for 2020 for mileage, I think in reality was probably it's definitely in the thousands of dollars, maybe the tens of thousands of dollars, because I drove a lot of miles in 2020 for events. So keep that in mind. You want to make sure you're claiming that deduction if you get a chance to do it. So what I'm going to say is this is equal to the mileage that I drove times the rate per mile. And this rate will change each year because, the IRS determines, okay, what's the price of gas? What's the price of this and that? And they do it that way. And if you do this, you cannot deduct, or you're not supposed to deduct things like every time you go to the gas station, other things like that are sort of other parts that are associated for your car, because this is supposed to take care of all of that stuff. So you can't also deduct your car repair bills. Now, there are other ways you can file it using, if you're leasing your car and stuff, you might be able to get away with it that way, but I just find it easy to do it like this. It works out better for me anyway. So our taxable income for 2020 is going to equal the revenue that we have minus the cost we have associated for the year, which is going to be our taxable income, minus the mileage deduction, which is technically also a cost, but I just kind of have it in this separate column. And this means if I was reporting it for this year, I wouldn't have made that much money. $12,000. But what that also means is I'm only paying taxes on the $12,000 that I got for 2020 and not the total $23,608. So that's why it's really important when you're doing this to make sure you calculate your taxable income and know that that's different from the actual revenue or all the money that you have. And this would be the number that I would give to my accountant, and that's the number that's amounted for what sort of tax return I get. So if I pay quarterly or I do things as an independent contractor where I'm getting a W-2, that gets factored in how much of a tax return I get at the end of the year. Anyway, once again, I hope you found this video helpful. If you do have any questions, leave them in the comments. I'll do my best to try to answer them. I'm not a tax expert. I'm not a finance expert. And once again, if you're looking for someone to help you file for taxes or you have any questions, go ask Kenneth Gragg. You can hire him. He's a great guy. And thanks for watching. All right, I'll see you in the next video.